I think the numbers were good. I mean, obviously a beat on the top and bottom line. We were looking for first quarter revenue of roughly 720 to 820 million. They came in, as you mentioned, a little bit below that in terms of the guidance, but I think overall it looked like a good number. I'm interested, Wilford, what that advertising revenue number was. I was looking for 765 million, which would have been about a 19% increase from a year ago, and that would have been the third consecutive quarter of almost 20% growth in advertising revenue. That's a big number because both Google and Facebook had very strong growth in their advertising revenue segment. So I'm assuming Twitter did pretty well on that, the fact that they were to beat on the top and bottom line.
Advertising revenue came in at 791 million, Dan. So you look pretty much right in line with where we stand. You know, the curious thing about Twitter, Dan, is that of the past 12 quarters, Twitter has beat EPS all 12 quarters. Of the past 12 quarters, Twitter has traded lower 7 of those 12 quarters, an area of Twitter sort of jumping around. What's your expectation in terms of how these results in aggregate will be viewed by the street?
I'm hoping, Melissa, that'll be a positive. I mean, as I said before, we've had a good rollover from other reports, Amazon, Facebook, and Google, in terms of advertising revenue. It's a beat on the top and bottom line. I'm just hoping that the street doesn't overly focus on that guidance going into the first quarter. It seems to me, and you guys follow the tech sector really closely also, it seems like a technology stock has to hit on every single metric for the street to applaud it. If it misses anything, any little minutia of the things that they're looking for, they seem to bring it down. So the climate seems to be negative on tech, but you know, we'll hope that Twitter gets a good reception.
Here's one thing that the street has not been taken too kindly with, Julia, and that's operating expenses in the tech sector going up. For 2019, Twitter sees 2019 operating expenses up by 20%. That compares to operating expenses rising 13% in the fourth quarter. How does that compare with what we had been expecting, Julia?
Well, it is stronger than what stronger growth than what we'd been expecting, or what many analysts had been expecting in terms of those expense growth numbers. Now, what's interesting is we've obviously seen expenses at Facebook grow dramatically. It's not that surprising to see expenses at Twitter grow as well, though that number is bigger than expected. I think part of that, though, is that investment in the health and the safety and security on the platform. We've seen Facebook hire 30,000 people to work in safety and security. Twitter talking here about how they've had a 16% year-over-year decrease in abuse reports from people who had an interaction with their alleged abuser on Twitter. They are very proud in this letter to shareholders that they just posted about the fact that they've made improvement in these areas. So it sounds like this is going to be an area where they're going to continue to invest more because it's really sort of a non-negotiable area in this day and age where, remember last year we had Jack Dorsey testifying on Capitol Hill. So as these tech companies face more scrutiny, I think that will be one factor driving those costs higher.
Krishna.
Well, so I think the Twitter earnings are interesting, but I think it doesn't really tell us a whole lot about the rest of the tech sector. And I think the rest of the tech sector, the outlook is still quite good. There's probably one sector that is continuing to deliver really well on multiple fronts. Things are slowing down, definitely, but it's doing reasonably well.
When you say tech sector, that's such a very broad term. Are we you're talking about FANG, so you're putting in this sort of Facebook, Apple, Google world, or in Amazon? Are you talking about enterprise? Because that's a whole other operation.
Well, so I think...
And then social is this sort of other... You know, Twitter's in this sort of very interesting place. I don't even know what to call it. It's almost like a media company.
It is. So I think in the social world, the performance of Twitter doesn't really tell you how things are looking for Facebook, because it's really very security specific. That's the point I'm trying to make.
Fair enough. Fair enough.
Dan, where does Twitter stand right now? I mean, we're talking about sort of the high bar that Twitter had going into its earnings report because of what Facebook reported, because of what Snapchat just reported. You know, the shares were up 6% since Twitter shares were up 6% since Facebook reported earnings. What sorts of valuation should you put on Twitter, especially as it does face some of the same challenges as the other social media companies in terms of spending in order to make sure there are no privacy issues, to make sure that that users are really users on the platform, for instance?
That's right, Melissa. I mean, Twitter is to me a kind of a niche play. We look at Google and Facebook as being those big commandos, so to speak, in the social media space with 70% of all-line advertising. But Twitter is still very interesting. It's got that niche type of market. It's more of a, you know, people check it every day. They don't stay on there as long as they do Facebook. But I still think it's viable, even though the users we're talking about the daily average users and so forth. I mean, what is it, 325 million versus Facebook at 2.2 billion and YouTube at Google at 1.9 billion. So it's still small compared to these other companies, but I still think it has a little bit of a niche space in the social media area, and it's still viable going forward. So, but obviously not as big as the Googles and the Facebooks of the world.
Stock is dropping down now. It's down 5% or so. What will be the key thing you're looking for on the earnings call to give you comfort that the headline beat is one that is, in fact, as positive as it sounded initially?
Yeah, I think a little bit more color on OPEX. I had $350 million on EBITDA. I want to get what their guidance is going into the first quarter in regards to costs. You guys were talking earlier about privacy and security, and we know that's a big issue with Facebook, and we know Twitter is addressing that also. And I think the street's really zeroing in on how much it's costing to ensure that the platform is safe and that it's private and so forth. So that's one thing I'm going to be focusing on the call in regards to first quarter guidance.